So, all right, we're preparing to live stream. So I think we are now up and running. Thank goodness for that. Okay. I'll see if I can share screen.
You're just trying to make my life fun, aren't you, Jeff?
Mate, how about mine? I'm sitting there swinging in the breeze. Okay, now we've got to stream it to around the world. Stop live stream says we are streaming. Okay, we're recording, we're streaming. Hello, everyone. Gee, it's good to be here. And actually going live to where I have decided to add a filter today to the gold and the gold breakout trade. The reason is it's a pretty big range today. It's $23 range already. And we've got a pivot dead ahead, and we've got a pivot dead ahead for our entry on both sides. So I'm seeing the potential for this to range rather than to give us a reasonable reward for the risks that we would be taking as a $23 risk. So I am going to add that filter. I think it's a silly trade to take, and you watch it go.
You sharing screen, mate?
Probably not.
No. Can't even see your picture.
They can't even see me. Gee whiz, no. There are bonuses. Right, there we go. Sorry about all this. It's just taken a hell of a long time to sort out what was going on, but I think I started Alexa's show instead of ours. Righto, let's wipe all that and say g'day and hope you're having a wonderful week and day to date. I haven't got much to report. I'll update a couple of trades that I'm in. And you guys may well be, depends on if you're in the Telegram group or not. I'm not sure. Did I place the Aussie yen trade on Monday? Was that Monday?
No, you didn't. No. Interesting you say that because we were
Tuesday
talking
morning.
about the Aussie. Yeah, me too. I got in on Tuesday on the Aussie yen.
Right. Enjoying or not enjoying a pullback at the moment, but you would probably expect that after a couple of days. Don't really like yesterday's candle, to be honest. Came off its tail or came off its low at a support level, really. I haven't done anything. I've kept the trade alive, but I think I'm going to move my stops to entry. We have taken first profit on that. So let's just drag that down to entry. Can't remember what it was. Aussie yen. No, I haven't got it written down. Let me see. I'll remember if I get a hold of it. 89.35. Let's go with that. 89.35. Somebody who is in the Telegram group can correct me if that's wrong. But that's where my stop loss is at the moment, being protected by the weekly pivot, the monthly pivot, the trade line, and the resistance trade line. If it goes through that, then I'm horribly wrong with the directional bias here. I think this one's based primarily on what the market's expecting the new governor of the Bank of Japan to do tomorrow morning when the BOJ do make their statement on monetary policy. And it looks like the market's expecting a bit of a change in that direction. Hopefully that is the case. And if there is a bit of a change and they do look to tighten their monetary policy, then we're in the right trade here and we should see a decent result. If it flips the other way, of course, and they do nothing, then I suspect the weakness in the yen will continue and the stop loss, it won't matter if it's where it is now, up here or up here. I think the yen will tank again and we'll see the Aussie outpace it fairly rapidly. So it's a flip of the coin here, really, for mine. It's based on that news event, and hopefully it goes our way. I won't be doing anything to this because I want that free ride if it does come in the morning, if I'm still in the trade, and no profit levels at all. I'll just let it run until I see a major support level, which probably is down in this vicinity somewhere, around about the 85 mark. That would, of course, continue the trend of lower lows and lower highs, which is currently where we're at. We're trading at exactly the right point of this. Hopefully it does play out. We'll see. Two other trades that I took. Actually, I think I've been trading this for the last 2 or 3 weeks. It's Aussie yen short, Aussie dollar, sorry, short on the weekly, trading exactly the same chart pattern as I traded on Aussie yen, which was the false break to the upside. A little bit different in terms of where we are in the market. That's the weekly chart that I am looking at. So we have really broken that downtrend, but it refuses to go away. So again, back under here, I think we've got the right direction, and that downtrend may continue. Also traded that on the daily yesterday. I think it was yesterday. Exactly the same thing. And what was I trading on the daily? The thing that I call the dominator, which is, and again, if I go a little bit wider, you can see the potential of this to be, it's hard to call that a bear flag, to be honest, because it's about 10 bear flags joined together. It's a very, very long in the tooth one, but we do have the break. We do have the retest to a point of that trade line, but it has hit a backside of support, so it should become resistance. Thus far, today it's having a little bit of a rally, the Aussie, but I expect that we're going to hit TP1 today. And if that's the case, I will make that one safe as well. What will happen is if this gets taken, if the TP1 gets taken, then the weekly will kick in. So I should be in two positions, one safe and one not at the same time. So the entry for the weekly is about 3 or 4 pips underneath where I'll take profit on the daily. So it should be okay. Won't be exposing myself too much to the Aussie short, which at this current point in time is okay because we've taken profit on Aussie yen. We've got that stop loss to entry. So that's only going to be a winner. Only other thing that I'm super keen on, I think I mentioned on Monday as well, and it is pound Swissy. Now, pound Swissy, for all the reasons that we spoke about on Monday, which is these all-time lows. Pound Swissy is not at an all-time low, but it is at the bottom of a range that's been going on for six odd months. And yes, we're broken twice to the top side, but not once have we broken below that 110.82 level or whatever it is that I've got there. So I'm expecting a bounce here yet again on pound versus the Swissy. Swissy is overbought. We've discussed that on Monday, in my opinion, and only really need to see a pullback here to trade a breakout. Prefer not to do that, but if I saw a higher low in this vicinity, backing up the Morning Star. Is that a Morning Star for you, Ash?
Yeah. I mean, it's certainly not a classic, but it's I mean, that outside bar is a pretty positive signal in itself.
Yep. So my higher low comes in here, then I'd be more than happy to trade that long. There are a few game changer plus bars that I don't really want to discuss because they're out of context. But if we have enough time a bit later, I'll go there. A few game changer bars as well, which are out of context. But by and large, if the Aussie continues to tank, we'll have a great week. If the pound versus the Swissy gets a foothold here, then that'll be a bonus as well. That's about it, mate, for me at the moment. So I haven't got anything terribly exciting. I've had a very quick look at the euro, just to see if we've got an edge here today, and we do. Untested daily pivot. So we'd like price to get up here somewhere and form on the 30-minute chart, perhaps. It's going to take forever and a day to happen on anything bigger than that. So at the moment, we've got something that looks like that, and something that looks like that. It's going to be a bit tight if we trade the break and retest, but if we can get up here somewhere and look for, don't even like a lower high here because I haven't got a reversal bar. Break, back underneath, retest the confluence with a small candle, please, so that we can actually trade down to there and get some profit in the bank. But that's on the cards. The further it goes away, the better I like it. And if it happens to be well into New York session, then so be it. We will miss it. I will miss it because I'll be sound asleep. Right, mate. What's on your agenda for the day?
Cool. I mean, not too much, buddy. I also took an Aussie yen short on Tuesday. As you know, I took the Kiwi yen short on Monday, and that got stopped out. So that got re-entered and made profit. But it was really the Aussie yen that was the best one because and I like the Aussie yen for some further downside. I think you're absolutely right. I did get out here. That was sort of I was just trading my stop. That was my entry point there because it was on the hourly. So when this started to break down and give me that lower high, I had pretty tight stops. So it was a lovely little 3-to-1 trade and just trading down because it just collapsed after the inflation data came out of Japan, and it was a slight ease to the upside on inflation. So the Bank of Japan, should they raise interest rates? Not so sure. They might still sort of wait and see what's going to happen, but the rhetoric might be a little bit more hawkish. So that could, as you quite rightly say, boost this to the downside on the Aussie yen for another leg. And when you look at it on the 4-hour, lovely head and shoulders pattern. I mean, that's really what I was looking for to trade on the neck, on the right shoulder, that has broken down on the first time of asking of completing the head and shoulders. So a move to the downside. I was quite happy to get out. I am quite happy to get out here because I think that the head and shoulders, the patterns that I was looking at have played out. So if this is to go again, I kind of need to get more conviction about what's happening down here. So I think it will go again. I think there's another decent trade. It might come and test this monthly pivot possibly before it goes, but I do think that there's still some downside in the Aussie yen. Possibly, I haven't got a strong conviction about it anymore, but possibly some further downside with that one. The FTSE is of interest also for some downside. We just had a little bit of upside this morning, but you can see here this is last week's pivot. So last week's lowest point was here, and we're not too far away from that area. And you can see that there is just a little bit of support here. Lots of bounces, lots of bounces, lots of bounces. It has become a bit of a ceiling. So I wonder whether this might start to roll over again. And if we look at it on shorter term timeframes, there's maybe a case to be made that there's a possible trend line as well that starts to give you some confluence in this area. There's some price action here on the hourly, maybe a shade higher, and I think that one comes down. The reason that I'm not so keen on the FTSE short at this stage is that we've still got 2 days left of April. But I do think there are concerning signs here, considering we are just about to kind of cross into a traditionally weak period for stocks. And it's the same with the dollar. I'm finding the dollar quite interesting, and against the Swissy particularly. I think the Swiss Sing is probably the trade for me of the day for some downside when I look at it. These two bars here are suggesting that we are going to get a little bit of a fall back to the weekly pivot, and if you a minimum to the weekly pivot, and it could be a lot worse than that, because what's really happened with the Swissy is that the move has been pretty steep to the upside, and that would suggest that if it was to roll over, it would probably roll over relatively fast and probably quite sharp, and it probably could be a sharp drop lower. So I'm looking at Sing Swissy lower, as I say, 2 bars that look pretty good. The hourly's just shaped up. Probably stops would have to go above the daily pivot, but really they only should need to go somewhere above this cluster. But there might be just a bit of a spike of a bar. If it was above the weekly pivot, then we're looking at a potentially near a 2-to-1, looking at 1.5, better than a 1.5, but not quite as good as a 2. So you might want to just see if you can get a little bit of retracement, or put the stops a bit tighter under the daily pivot. I don't like it when price has not quite touched it. It's it does become a bit more of a concern. And also, when you look at this this pattern, we're kind of in the buy zone of the pattern. If you look at it there, it's a bit scruffy, but it's probably about there. Looks like it's around about there. We got near a touch there, touches here, and we're sort of in this buy zone. So it does suggest that we may well still push to the daily pivot. If we got some signal here, it'd be better. but I do like this one for some downside. I think that there's some coming, and it's just about strategizing the best way to play it. This bar would suggest that we may well be in the zone, but this area here just doesn't make it look quite as attractive. So a push possibly could be in, and also the Swissy is very, very strong for the last 2 days of April, so that's also a bit of a concern. But it does suggest to me that if this holds, particularly, on the Sing or the dollar, I really like, and very similar. You see a big push up with the dollar Swiss, and a cluster here, untested daily pivot. So it's a very, very similar looking chart as we've seen to the Swissy Sing. And then what that tells us is, if we were effectively looking right across the board, we see the Aussie Swissy moving to the upside. We see the CAD Swissy just starting to ease to the upside, and nothing huge, but certainly some easing to the upside. The Euro Swissy is still relatively elevated as well, and the Pound Swissy is pushing to the upside. So it's kind of suggesting, Kiwi Swissy the same, suggesting that the Swissy is possibly going for a bit of a turn here. We've got this area of supports, resistance down here, but when you look at the longer term timeframes, we really are in a buy zone, at these lower levels. And the question is, what's going to start driving it up? Well, when you start to see a few of them that are suggesting that they are hitting a buy zone, and you can see it with the dollar. Here's the area with the dollar, much easier to see really on the weekly down here. But when you start to see this, it is suggesting that there could be some upside. And again, it's another one of those that's had a pretty steep move. So a turnaround here would be on. But the same issue really with the Swissy being so strong, the dollar's really quite weak going into the end of April, and we're only 2 days away, but it could be significant because it's an end of month. It's not like a middle of the month week thing, which does tend to sort of have a little bit of leeway either side. It just puts me off trading this just yet. But if we got a weekly bar that ends up looking like this or similar, we're a little bit higher. So by the close of tomorrow, next week's trading could be quite interesting, and the dollar does tend to have a pretty decent spike at the start of May. So I'm looking at this dollar Swissy, but it's more on my watch list than it is actually a tradable opportunity. And one of the reasons I'm sitting on my hands is that it's been a decent month, and I don't really want to give anything back. Taking another 1 or maybe 2%. I doubt I'd get that much out of the next 2 days, but let's say I managed to get another 1% out of the market. The pleasure that I get from that doesn't really kind of equal the disappointment I would get if I was to lose 1% at this stage or 2% at this stage. So I'm just going to sit and wait right now, mate. Let the fluctuations happen, and see if I can get into some positions next week.
Yeah, I'm the same. I think next week's shaping up really well because things like the Swissy are really overbought. The Euros, in my humble opinion, there's a few things that could well reverse next week, and of course that's our playground.
Yeah, and you look at gold as well. Gold is suggesting that there is some weakness in the dollar still. So there's enough to suggest that the dollar's not quite primed to go. But I do think that there's enough weakness that we've seen up to this point with the dollar to suggest that the risk is now upside dollar. And maybe downside Swissy. Gold is a difficult one because, I can see the case for buying wherever with the gold market. The turn of the dollar and the collapse of the dollar, if it's to happen, of course, is always an if. But if it's to happen, it's going to be a long and slow process. But it doesn't really matter. If it's going to happen, it's going to happen, which does suggest that gold is going to be a lot stronger. So I understand why there's still some buyers, at these elevated levels, because gold could explode at any point, really. But from a trading perspective, this is a much more attractive area down here. So a dip down to around about 1950, which doesn't look like it's going to see that monthly pivot in the next 2 days, but it could. But a dip down to 1950 all of a sudden starts to become something of interest. And at that point, I'd be looking at gold. Could I get a position on? I think the difficulty is that gold is probably a much more long play. It's something that you'd really want to take for the next year, 2, 3, 4, 5, maybe rather than a trade. Exactly. So what I'm doing at the minute is watching the gold market and then seeing if I can deploy capital outside of trading just to hold on.
There
to
is a
some
fair
stuff.
bit of volatility this week in the gold market. Have a look at it. You know, it's up, down, sideways.
Yeah, yeah.
So small time frames are beginning rolled over. I would have thought getting absolutely hammered.
Yeah, exactly. I mean, that's the other thing. You know, you could still put it onto a trading account, but the problem is, maybe it's sort of worth it. What you'd have to work out with something like gold is when you're kind of like paying for the swaps, does it equate to the percentage fee that you're going to pay to the broker when you buy physical? Because you could just put this on at get yourself a multiple of 1950 and just put on 3, 4, 5 lots, whatever it is that anybody's comfortable with, and just leave it run. But you'd have to work out every rollover, every quarterly rollover, what does that cost you, and does that cost equate to in the next 2 years less than if you were just to buy the stuff physical and hold it? Because if it's going to cost you more, there's no point in trading it, and sitting through it all. It's better just to kind of have the cash and go and get yourself some and stick it in a vault. So I'm watching the gold
market. They are, of course, charging a pretty premium at the moment for gold. Unfortunately, it's probably a symptom of what everyone's been saying, right? Buy gold, buy gold, buy gold. And of course, when the demand's so high, the price is going to go up as well.
Yeah. Same
when
with
the supply is so low.
Same with the crypto market, mate. I'm quite keen on the crypto market. It's held out, I think, pretty well. And I will bring you a chart of Bitcoin. It's done all right. It looks to me like it's showing enough resilience here to potentially be a decent enough time to buy. This is the Bitcoin chart on 2800 and 28,000, and this head and shoulders is not too attractive. And when you look at it on the weekly, it suggests that the level might well be down here. So somewhere around about the 24,000 level looks like a really decent, a really good horizontal level there. But it might be that this is going to take off. It might be that it's on its way, and that's that. I kind of would be okay to and happy to kind of leave that alone, but because I'd really want it to come and touch a level. 24 looks good. And
what are your squiggles there? They EMAs.
These are the EMAs, yeah.
Yeah, there's a slingshot candle pattern there too. Well, okay.
Yeah, I mean these EMAs could probably come out just so we can look at the bear price action. But yeah, it could go from here, as I say. It could easily go from here.
That suggests to me that it will go from there if it gets back above that horizontal level.
Yeah.
Which it has already broken and retested. And I don't know what it is. Look where the lows are in the middle of that level there.
This one here.
No, exactly where you were. Up. The most recent break and retest.
Oh,
Keep
this
going.
here, yeah.
Yeah, there.
Yeah.
That looks pretty good to me.
Yeah, well, Bitcoin, another one that could be of interest considering the woes of the US dollar, and same with Ethereum. I think it's not a bad time to kind of go and buy the kind of blue chip cryptocurrencies. Much nicer looking
Same
chart,
pattern.
I think, on Ethereum. So
really, I see exactly the same thing.
Yeah,
because that horizontal level has been broken and retested. So to me, an entry above the seller bar makes sense.
For Ethereum is it just looks like it's actually sitting on a slightly longer term area of support as well. So I like the look of both of them, but I probably prefer the chart on Ethereum. So yeah, I could see the crypto market starting to boom to the upside. So both these look good. Gold looks like you should be buying it, but maybe the price point isn't quite there, but it's not probably that far away. And if you're going to be sort of looking for the dollar to potentially lose its reserve currency status, then these areas look like relevant kind of areas to go and get your to get the money in. So yeah, Ethereum, Bitcoin, and gold all look pretty good right now.
Of
and
course,
if you look,
you're going back to the US dollar and the decline that we're anticipating.
yeah,
It's not going to happen. And you said with gold, it's going to be a bit of a drawn out process. And I think before that happens, we're going to see some turmoil. Not so much, well, in the markets, true, but I think we're going to see military turmoil, because the US is just not going to roll over and say, oh, yeah, okay, we don't want to be the reserve currency anymore. Here, where you go, you can take it.
Oh, I totally agree, mate. I totally agree. And when you think about that military turmoil, that also pushes people towards gold. Anything that is going to that's going to put concern into the globe, it really does drive us towards the precious metal, the safe haven of the precious metals. We know that central banks have been buying it. So the difficult thing with gold is the price point looks elevated. Well, it is elevated if you compare it to where we've been over the last 12 months. But there's nothing to say that this thing won't take off to 5,000. It could quite easily double it, and if not more, over the course of the next 5 years, if we get the turmoil that suggests that it could happen. Inflation is
according to the Australian Defence setup. I won't call it force, because I don't know if they're talking. I suppose they are, because they advise government, right? The government here in Australia is very nervous at the moment, and they're buying up arms and all that sort of stuff like no tomorrow, because if you believe the rhetoric, then China's building up a strong presence in the Southeast Asia, number one, and Asia Pacific. So that's our neck of the woods, of course, in Australia, and that's why the government are pretty nervous. I wonder, do the two things correlate? In fact, I don't wonder. I think they do. The fact that we're looking at a change of guard in terms of reserve currency, and the anticipated reaction from the US to that scenario. That's what I think we're seeing.
Yeah, well, yeah, absolutely. We had our government issue mobile phones with a security alert warning, and they tested it last week. So that's the first time that they've ever done that. And they've said it's for, I don't know, certain weather emergencies and terror attacks and stuff. But we've had terror attacks, quite severe terror attacks before, and weather system situations before, and that's they've never gone to these points. So it does suggest that they know something that they don't really want to disclose. Which again, this pushes us back to the safer
where do you
things
position yourself for that? Yes.
Yeah, where you're going to position yourself. Gold looks good. Bitcoin looks good, and if there is, if nothing sort of like that does happen, there's nothing too bad out there, then of course Ethereum is going to look good as well. So I think that there's a case to be made for these assets, certainly to have them. The problem with Bitcoin and Ethereum is they're digital, and if there is some sort of cyber war, how do you know that that's not going to get attacked? The one thing about gold is that it's tangible, so at least you can get your hands on it. If you choose to store it yourself, so it might be a slightly safer play. And
not necessarily just gold. Certainly silver, platinum, palladium. All those precious metals. They'll as you say often, a rising tide carries all ships. So I would anticipate there's probably better reward to risk metals to trade than gold.
Yes,
could be wrong. But that's kind of worth looking at, I think.
Yeah, agreed.
Certainly you get a better price.
Yeah. Well, this is the silver chart as well, which is also a little bit on the elevated side, but silver is already up 20%, 25%, from its lows down here. But if you count this one down here, which was back in September, then you're looking at, what's that? 6 is 7. I mean, that's a decent. Oh, let me see, actually. 1734, 40% rise from the lows here.
Mm.
You know, and that's in a matter of 6 months or so. There's been a 40% rise in the price of silver.
Yeah,
Look
not
at that.
happy with
Look
that.
at that inverted head and
Want to buy
shoulders as
some
well,
more.
mate. Look at that. I mean,
Yep,
that's that.
yep.
It's a bit.
And once again, there's a nice little slingshot candle pattern sitting there. 3 high test bars sitting on a trade line.
I mean, this is predicting back to its highs. You know, if this head and shoulders pattern was to play, inverted head and shoulders was to play out, it kind of does predict it's getting back to another kind of $50 breakout there. Sorry, $5 break to the upside. That gets us right back to this level up here. Whoops. So there's a case to be made for another 20% rise in silver as well, and probably beyond. You know, when you sort of like consider that silver has been much higher than we are now.
Yep.
You look at that level
By the
there.
dip
You know,
scenario.
yeah. So longer term plays, but you know, not to my mind, not really trading opportunities, but more
No, I
investing
agree.
opportunities.
I think the smaller time frames are going to get you into more trouble than they're worth.
Yeah. Yeah, so nothing doing, mate, but it's still enough weakness there to suggest that we're going lower. I think there's still sort of some bearish. I mean, look at the FTSE. It's tried to get up to the level that I was looking at, but it's not really been able to even do that. It's been pretty close, actually, fairly close. That was the area that I would have chosen first of all, and it got within 4 or so pips of that, and it's just started to ease back down again. But we're seeing this across the board. Decent tech earnings has enabled the Nasdaq to have a little bit of a boost. So probably the hedge trade of the moment would be a Nasdaq long alongside something else, which is never a bad thing to do. I think you know, particularly in this current environment, a hedge trade might be a much better way to play things. You can see that the Nasdaq probably has got a lot more room to the upside than the likes of the FTSE and probably the DAX as well. You know, DAX is at these highs up here. So another one that's probably a cyclical type of market. This one could start to ease back down again as the Nasdaq eases up. So or at least stays a bit more stable. So I think the hedge trade on this one as a longer term play could also be something to look at.
Cool. All right, there's some ideas for you guys for longer term plays. I don't think either of us are suggesting that you go out and buy gold on a 30-minute chart with a small stop loss right now, or anything else, to be honest. But yeah, having it in your portfolio is probably a reasonable idea, as well as have a look at those other precious metals as well. I think there's probably some good bargains to be had there. And it does look like buy the dip on silver. That's true. Speaking of timing and buy the dip, we had an introduction to last Thursday a new concept for most of us, which is called time by degrees. And I think you'll find that the Phil, who's going to join us now to talk about that, was anticipating the FTSE on the 24th, I think it might have been, would start to decline. I think the weekend might have got in the road of that, but on the 25th and 26th, I think we saw that start to occur. Interesting. Phil, how did you come to that conclusion? And thank you for joining us once again. What are you going to discuss with us today in terms of this time by degrees phenomenon that we know so little about?
Yeah, you know, Jeff, I think I'd like to review a little bit of what I did last week quickly, because I made a couple of errors in the text and it would have confused a lot of people if they went back and watched the video and tried to sort it out. So we also simplified the actual explanation of time by degrees. So I'll just...
Yeah, it's not something that comes natural to us, that's for sure. And there are a few people going, want to know more. So let's find out a bit more, eh?
Okay, so, excuse me. We talked about measuring the time by degrees, and then we drew it. We did talk about cycles, and we drew it as straight lines on the chart, but it's really easy to get confused. So we'll just go back to basics a bit. I mean, nothing's changed. So all I've drawn is some visuals, which often help people sometimes more than the explanation. So this is just purely and simply our 360-degree cycle. And for the sake of this exercise, no reason why I've chosen 30 and 90, it's just for the sake of the drawing, for the 90 and the 30. And in this case, they're all in phase. And that means they all start together for the sake of this exercise. So, to the right.
So just to be clear, you haven't chosen a starting point for any other reason than the exercise here to demonstrate to us.
Yeah, just to show us this exercise. I've actually jumped a step here too, but anyway, I'll go back 1 minute. And up here, simply, these ones are also start from the 1 point. So for the sake of this exercise, we'll say they are all in phase, right? But because that start point is where it is, it's actually, as you can see, 90 degrees from this one over here. Yep. So they just simply start from somewhere else. So I'm just trying to impress impart the point that it doesn't matter where they start. And I think I mentioned in the first video, I think this is part of why time by degrees gets lost a little bit in the translation of it all. So that's okay. So that's my point there. Anyway, we've obviously got a different starting point for this 30-degree cycle as opposed to this one over here. In fact, it's 90 degrees apart, and everybody can understand, I guess, that is from this point in the circle up to the top is 90 degrees. 4 90s are 360, obviously. So it's all about cycles and circles. So then we take the 30-degree cycle, which is a circle in the illustration, but we simply convert that 30-degree cycle into a straight line so we can apply it to the chart. Brilliant. So that's all you need to get your head around. Might simplify it a bit for some people. Okay, now I'll just go back a step, and that is the mistakes I made in the video. I said in the video at one stage, doesn't matter why, I just said there's four 30-degree cycles that'll equal 60 degrees. Well, obviously 4 30s don't equal 60, they equal 120. So if anyone went back and tried to watch the video, they'd think, what the hell is this idiot talking about? You know, so that's simple mathematics where I just made a mistake. Because as usual, there's 1,000 things come through my mind, a dozen things at once. And another thing I said was, yeah, that's it. And another one of the same sort of thing was the reversal day. I did an explanation for Ashley. I said about this, it was halfway down the range or something. And I said the reversal day, it opened here, it ran up, and it ran down and finished below its low. Well, obviously it can't finish below its low, but what it did is finish below its open, was the point I meant to make. So just a couple of things that would have been a bit ambiguous if you were going back and looking at it later. So I just wanted to cover those. And the other thing there, obviously on the screen to remind me is that Ash said, why can't you use 30 days? And I gave him a very vague answer because I said it's a bit technical. But I thought it might help him and others if I actually worked it out for you. So 365 days, 0.25 in the year. We divide that by 12 to get our, if we were talking about a cycle, we divide it by 12, we would get 30 degrees. But if we divide 365 by 12, we actually get 30.43 days. So that equals 1 30-degree cycle. By our definition, that our 30-degree cycle is 1/12 of the circle, the 360, obviously. Now, over time, that, in fact, in about 8.7 years, you would be 1 full cycle out. Now, 1 full cycle wouldn't worry us at that particular time, but halfway there, so 4.35 years, you would be half a cycle out. So all your calculations would slowly, over a 4-year period, get between 0 and that time period out. So that 0.3 days just adds up and adds up and adds up and adds up. So in fact, halfway through, we would be 15 degrees out. that's a big calculation to make. To make a trade to be 15 days out, you can't just guess 15 days. It just gets so messed up over time, you can't do it that way. So that's why we've got to convert the 365 days to our 30-degree cycle to make it work. And then you can just go on, because you can make, quite easily, well, I do, people that are into this sort of thing do, I can use calculations from a top in 1990 to calculate something down the track. Well, over that time, you'd be degrees and degrees. You'd end up being days out. You can't trade something based on your days apart. You see? Does that bring a bit better for you, Ash, or not? Make a bit more sense?
It does make more sense, mate. Yeah. Why have you added the 0.25 just out of interest?
Because there's 365.25 days in a year. That's why we have a leap year. We have a leap year every 4 years to catch up on that 0.25. After 4 years, our calendar is 1 day out.
So that means that the 30-degree cycle needs to start at the start of the 4-year cycle.
No, but somewhere along the line, that 4 years, that cycle, it needs to be. Now, hang on a minute. I'll rephrase this. That situation only needs to be justified in your mind. It's got nothing to do with me or cycles.
But if you start it the year after the leap year, that 365.25 will be out of sync. Because if the maths have to involve the leap year and you start at the year after the leap year, then it doesn't involve the leap year.
But it will the next year. It just makes up for the next time along. 300. Now, listen, whether it's a leap year or not, 365 degrees is 365 degrees. From the 27th of February, which was interesting because every chart I've looked at changed on the 27th of February.
Yeah.
From the 27th of February, it's 365 degrees from the 27th of February to the 27th of February.
Okay. Okay. Yeah. I get it. Yeah. I understand what you're saying.
Yep. So on the 28th of February, it's 365 degrees from the 28th of February, 28th of February. On the 29th of February, it's still 360 degrees from the 29th of February to the 29th of February.
But there's only one 29th of February. I can see Ash's ears going. Yeah. There's only one 29th of February every 4 years.
And he'll drive, and it doesn't matter because we're only trading that cycle. It's a 365. We're trading it from Ash's birthday to Ash's birthday. Doesn't matter what day it is or what year it is, or unless he wants to choose to have a birthday on a leap year and he wants to have a birthday every 4 years to keep himself looking a bit better. But yeah, that doesn't make you worry yourself sick over it. It doesn't matter. The sun, okay. we just go by the sun. Just accept it. You can work it out later. As you learn more, you'll work out the nuances of it, but it just doesn't matter. But I just wanted to point that out. That's and if you look at and if you're a skeptic like me, you could say that the calendar is arranged like this purely for making money. It's got nothing to do with living, because you live in. And you guys, I know Jeff certainly speaks about it. That is seasonal times, seasonal trade, seasonal movements,
seasonal patterns.
Seasonal patterns.
That's Ash's thing, not mine. But
okay. Well,
if you ignore them, I think you ignore them at your peril. I'll put it that way.
And the seasonal changes in the stocks and everything, he fits in absolutely 100% perfectly with this, Ash. And you will find we can illustrate that on here. This can help you because they don't always change exactly on that day, obviously, as you'd be aware of. So what this system that I'm trying to impart the knowledge to, that will tell you which one's going to work and which one isn't.
Yeah, I was going to say that there must be better times to start a time by degrees pattern than others.
Okay, right. Yes, you are right, and I'll just hold you up there if you don't mind, because I'm about to explain that. So that is part of the phasing. That's why I introduced this term up here, the phase of where the cycle starts. This one starts here, that one starts there, right?
Yeah.
And that won't look like that on the chart, but I wanted everyone to be aware of that's what we are going to do. We're going to work out where to start those cycles.
Right.
Okay. So if everyone's happy with that, we can move on from that.
Yeah.
And we're going to use this chart to do that with. So have I done the right thing and you've still got my screen, I guess?
Yeah, mate.
Yeah.
Yep.
Different chart on it, right. So this one happens to be the Aussie 200. And I've chosen it for no other reason in that, other than that it was easy to grab because I can easily get rid of the data that I didn't want to use for the sake of this exercise. And it is a pretty good one to use, and the screen was pretty blank. So, and we'll just get rid of these not to confuse people. Okay, so this is where we're going to start the phasing. So just imagine yourself, you've been looking at what I've been trying to explain, and you think, well, this 30-degree cycle seems to be a key thing. So we'll have a look at that. Where the hell am I going to start it from? And all you have to do is, the chart will actually tell you where to start it from. And this is what I keep saying, and I know it sounds a bit strange, but the vertical lines, as we spoke briefly on last week, these are the sun times, where the sun was in the sky at this time of year, over and over again. And the 30-degree cycle remains the same. So the two of those go hand in hand. So when you look at the chart, without worrying about the time by degrees at the moment, it's as simple as we've got a high there, a low here, a high there, low, high, low, high. Simple as that. You go, well, where am I going to start? Well, I'd suggest, well, I know what I do, because I don't worry about trying to work it out anymore. I just go, well, there's a high, I'll use that. So all I do is I grab this one and I stick it on the high, right? You think, well, that's logical. It's a high, it's a significant point. It's really close to a sun time by degrees. That vertical line represents sun time by degrees. As we spoke of before, can be a day up because of various reasons. So a day we don't sweat over a day. You know, it could be in the middle of the night or 12:30 or 3:15 in the morning, and end up it's just a day. So it's either spot on or a day, 24 hours. And just while I'm on that point, you asked a question last time as well. You said, it might have been, yeah, I think it was. You said, so this would be the same for the FTSE all around the world. And that's correct. The only difference is that, because I didn't explain that very well either, that the reason for that is because the sun is simply over Europe 14 hours or whatever it is after it's over here. So the same things are valid. But if we apply it to, as we are going to tonight, so this will explain some of the vagaries of the other text chart and this one in a minute as well. So it'll work on top. If you want to get really technical down to the 4 minutes or whatever, you can work it out, but you said you don't need to. So the point is, England, or whatever you are, you 14 hours behind us or in front of us, whichever behind us, whichever way it is, or how many, you know that I can't remember. But whatever
I don't know.
No,
it's at the moment 11 hours, I think.
Okay, so at the moment, if we work the chart out and we said the FTSE is going to turn at so and so, it would give us a time for the Australian market, and it would also give us a time for the, if we're providing, we put the sun times in for, these are all put in here from Sydney. I remember I mentioned the ephemeris where we look up the sun times, or the place in the sky where the sun is. Well, that one I use is for Sydney because that's where we are. You can also get one for London. So if you put the London times in, at times they would agree with this, at times they would differentiate by 11 hours. Well, they could still be 11 hours come and go, but the 11 hours, 6 hours might be on one day and 6 hours might be the next day, depending on where the sun was. So that can give you a different day on the chart itself.
Got it.
Got it?
Yeah.
So it's purely the time difference. That's all that's about. Okay, so we put these on the chart here, and then we think, well, can we draw it in real practical now? So I would just grab this or whatever, grab your crosshairs or whatever you want to do, and run it down here, and you think, well, is that, oops, I want to leave this here, so I'll put a line there. And then you think, well, 30 degrees, it hasn't really done much. You couldn't say that's a definite change in direction in the market there. However, it is in relation to what we're trying to make money out of. You just got to accept this for now, because we went through this a little bit before, but we're going to do it a bit more detail tonight. So we're roughly at a turning point in the market. Agreed?
Yep.
Yep. This was a low, that's a high. It's not quite to the day like we think. Well, it could be a long weekend. You know, we went through all this before, for whatever reason. So we accept that one for what it is. So then how do we go to the next step? Well, you don't know whether this one is valid or not at this stage. So there's two things you can do. What I would do is I just grab time by degrees and run it from this point up here, because now we think that one might work, but if we start using this one from here, now we don't know whether that's the actual day there. We spoke about this before. Sometimes when you calculate for various reasons, we use the low before the high, or we might use, you know, the low before the low or the high after the low. It's just a day or so here or there. That accounts for the difference. But anyway, we noticed that the sun time actually works out near this high as well, which we're trying to trade. So to start with, just use the sun time because it's there, and we see what that lines up with. So in this case, it runs back down to here. Now we know it can be a day out or whatever without getting too technical, because we don't need to. So this could, as we've seen on the other charts, or this one, look, this could be easy 31 days. We're not splitting hairs. So if you put 31 on here, it'll probably go too big. Probably go to 33 or something, we'll just see. But, oh no, that's not too bad. So it's 31 degrees to that day there. Now, this was obviously the bottom, but that's the day the market changed. So that's a valid date. So that's just confirmed this date, this high up here is obviously a valid date, because this in its own way defines the low, doesn't it?
Mm-hmm.
It tells you that that's what we've got to be looking at. So now you think, oh, okay, so we're in sync with the market here. We've identified this low, we've identified this high, we've identified this maybe midpoint, who knows? But we're having a good run this way, so let's make another one on here. So, and I would start here. Now we know it could be the low after the high after the low, or the reversal is after the low, or whatever. We've confirmed. In fact, with this one, what was it? Look, it's opened on its low, look, and it ran up that day. So it changed on that particular day. But the point is, that was the low, wasn't it? You can't argue about that. But once that changes direction, you then know that you're onto something here. This market's about to move, maybe, but we'll go into that later. So then we run this one across and we grab something, anything, whatever. If you grab the actual low day, look, 30 degrees, and we'll just slide it up there for the sake of exercise, just to make it easy. And lo and behold, hang on, I jumped that across, didn't I? It was about there, wasn't it? There you go, 30 degrees, look. So if we got that within a day, that within a day, and that within a day, we're not doing a bad job, are we?
Yeah, it's interesting stuff, mate. I mean, I think well, you're absolutely right. I mean, if you can get sort of like within a day or two of a turning point in the market, and you've got a decent system to actually look for a chart pattern, and the chart pattern appears during that particular period, then it would appear to me you got a pretty powerful system.
Well, it gets better than that. So this is only one stage of it, believe it or not. So then we can run. So now we've okay, this worked, that worked, this worked. So I'd say we're on a good phase here. So we'll put another one from where that goes to, where we think that one might have been a midpoint. We weren't sort of sure. It was a bit vague, really, because we don't know much about it at this stage. We're still learning the process. So we run this down to that day there. Once again, because it's a midpoint, it could be, I'll just use my arrow. We don't know, well, I mean, you can calculate it again, but it doesn't matter, Ash. So it could be this day. Well, in fact, that day's the high. Look, that one there.
Why would you calculate it? Surely the calculation from the very first time you do it is the one that you then have to run right the way through the period.
Well, yeah, no, but remember we said about it could bottom on a certain day, but it doesn't actually turn to the next day. So the calculation for the next phase, you start with the next day. Now there's lots of reasons for that, and I just tore my hair out over this for a long time, because I used to go, well, how come it doesn't seem to work here? How come I've got to use it? I've got to go the low after the, in this case, I would call this the low after the, well, anyway, it doesn't matter because it just gets too it gets a bit vague. So you just got to accept that it's got to reset the cycle. Look at
But if you've worked out the time by degrees by the whole year, surely when you've picked your starting point,
yes.
you're really looking for the rest of the year to follow the pattern from the very first starting point.
Okay, so you are right, and there's reasons for that. So one of them can be that the time by degrees for this cycle was at 5 to 12.
Yeah.
Midnight, or whatever you want, midnight or midday, right?
Mm-hmm.
So this brought that, so it was basically a time by degrees day by our definition. But the next day, the time by degrees cycle, the sun time or moon time or whatever, it came in at 5 past 12. So technically, if you could draw a bar, this was said about the calendar set up to make money, not used to make money for other people, not for us to do this. The government used it to create jobs and make people go to work and maybe or maybe not have a Sunday off. It's that all part of it. But anyway, I won't go into that. So then this one is actually most of its time. So the sun was, and the sun is only a little bit out because of the times that we talked about. They have the 29 or the 30 degrees or whatever. So that happens to be day out. And then this one actually came in on the right day, but it's at 5 to midnight. The actual action was happening the next day. So it started there, say, for example. That's one example that you get. Mm-hmm. There's all these little wishy-washy things, and that's why these systems that you read, I mean, Dan set up time by degrees years ago, but if you go and do his study, which I've done a bit of, and because that's David Bowden did the same stuff, it becomes very difficult till you get your head around this kind of stuff. And it is calculatable simply in math, as I said, degrees and minutes and seconds. But you tear your hair out doing it, Ash. It drives you mad. We don't need to, because I'll show you the way we can fix all that. But you are correct in what you are thinking. And what you will see is, in fact, this is a classic. I think we've got it here. We have too. Look at this. So you think, oh, no, it's different up there. Why is it different up there? It happened to be different up there, but it's not down here. Where are we? It's 31 there. Look, when you're running up here. Oh, it's on there. That's right. Actually, that's not a good example. I have to show you another one. But what you'll find is sometimes is that this might work out on cycles, but this one will show you 30 degrees, but this one will show you 29. So the 20 and the situation with the variation in the Greenwich Mean Time or the sun time in Sydney versus the chart, if you've got a 29 and a 30, a 29 and a 31, those two add up to 60. So that cycle balances it out in 60 degrees. So even though technically it's wrong on one side by a degree, and technically it's out on one time, but the next one's 30 and 29. What did I say? 29 and 31. They come to 60, so it levels itself out, and that's only variation in our calculations and our human mucking about. You know what I mean? It's all there.
No, I get that.
It's all scientifically. That's why I say don't sweat the small stuff because it'll fall into place shortly.
Yeah, the takeaway is, although the time by degrees is indicating that we're at a high or a low, it doesn't mean we trade, right?
Correct. Yeah,
Need more info.
None of this is the full story. It's not saying that's a buy or that's a sell.
Yep.
Yeah, it's
really putting you on alert.
Okay,
we might have to pick it up again next week because we've got a teacher strike here, and I'm just about to do a little bit of entertaining for the next 8 hours.
Okay, because there's one.
Miss Molly.
One thing. One thing, for example, we could do here. We could do this. You're going to go. How are you going to trade that? Or even another one. We can go. What am I going to do there? So that's a reversal day. Are you going to be thinking about trading it or not? And what's going to tell you if it's going to keep going up or going down? I'm about to show you that. Okay.
Okay, amazing. Well, thank you, mate. Yeah, maybe we should try and get some more time in next week. So it looks like we probably.
Well, you will have because I won't be here.
Oh yeah, amazing. Yeah. Oh, we'll spend the majority of the show on this, I think, next week, Phil.
Oh, that sounds daunting.
Daunting. The majority. Well, we'll see. I mean, there might be sort of trades of the market. We'll see.
No,
But,
I'm only joking. No, that'd be good. But I think
amazing.
we're getting a little bit more of a handle on at least the phasing now and some of the terminology and stuff. You say?
Yeah, no, there's something's just dropped into place a bit, so that is pretty cool. So I think the foundations are a little bit better now. So yeah, let's pick it up next week and see if we can add some more detail. No doubt I'll have more questions.
Yeah, no doubt. Oh, that'd be great.
And I'll watch the recording when I get back.
Amazing.
Now, no show on Monday either, guys, because it is May Day, and that of course necessitates a bank holiday in the UK. So there will be no trading buddies on Monday. There will be trading buddies on Thursday. Is it 2 weeks in a row?
2 weeks
on
Mondays? 2
Mondays?
Mondays in a row. Yeah.
Yep. So only one show for, well, I won't be in until Thursday week. Okay, that's interesting. But Phil will show you next week. Okay, we're on alert because Time by Degrees has told us we're on alert, and it looks like we may be looking for a trade, but we've now got to go through our filters or our mode of entering the market and see if that agrees with the Time by Degrees, if you like. And that's what you'll show them next week, Phil, right?
Yes, yeah, that's right. Mate, what dates we will be not here and here next week? Did you say? Sorry, I missed that.
Next 2 Mondays, no show, but
no show next 2 Mondays. Yep.
No interruptions to Thursdays at all. Thursdays will keep rolling.
Thank you.
Thank you, mate. Much appreciated. I'll catch up with you, no doubt, before the weekend. And Ash, thanks for being my trading buddy as always. Phil, thank you for being our trading buddy now.
Yeah.
And of course, those in the room, thank you for being our trading buddies as well. We look forward to your company next Thursday when Ash and Phil will join you, and not Monday. Keep note of that. Euro dollar has not tested the daily pivot yet, so further that moves away, the more you want to watch it. And keep selling Aussies, someone, that'd be good. Everyone have a great weekend, and we'll see you or Ash and Phil will see you on next Thursday. Bye-bye.